market tumbled deeply into the red on Thursday as the White House clarified its plan for a massive 145% tariff on China, continuing to escalate these trade tensions. US stocks gave back a sizable portion of the prior session's gains as investors grappled with lingering uncertainty about President Donald Trump's trade and economic policies. On Friday, China retaliated against massive US tariffs with its own 125% duties on goods from the United States, but said it would ignore future increases by Washington. The dollar has also plunged to the lowest level against the euro in more than 3 years and slid against other main rivals as investors fled what it typically considered a key safe haven currency. US bonds were also under pressure amid speculation that China was offloading some of its vast holdings in retaliation for Trump's measures, with treasuries being sold off, sending their yields higher and making US debt more expensive. There is a fear of a bigger exodus from American assets down the line. Meanwhile, gold hit a fresh record high on Friday, while stocks diverged as hiked Chinese tariffs on the United States deepened a trade between the world's two largest economies. Oil prices rebounded only by a small amount after huge falls on Thursday. Let's take a look at what industry leaders have said on the matter.
For us, it is not just about higher export cost. It is about growing uncertainty which impacts investment, production and jobs. Only last year, 54,000 jobs were lost in Europe's parts manufacturing sector as we navigate a major industry transformation. In this context, additional new tariffs only adds additional pressure to an already existing and challenging environment.
Joining us to discuss these developments and the future prospects for those American markets ahead of their opening shortly is Ross Feingold, a political risk analyst joining us from Taipei in Taiwan. Ross, thank you as always for being here with us. We mentioned there about the stocks closing on Thursday. I want to look forward now, and given we've had this major development from China, where do you see these US stocks going in the coming hours?
It's possible they'll continue in the red, given the news out of China that they are going to raise tariffs on American goods all the way up to 125%. Obviously, that's going to hurt various kinds of products, most notably agricultural products, but other products that the United States sells to China. Even though we talk so much about the U.S. trade deficit with China, we have to also keep in mind that United States companies sell many billions of dollars of goods to China, every year as well. So there are certainly exporters in the United States that will lose, and this is going to weigh heavily on the markets in the coming hours and possibly the coming days.
Yes, Ross, we're showing on screen at the moment some of the businesses that have been impacted by these tariff announcements and the ongoing trade disputes. With so much being lost in certain areas and certain sectors, what impact will that have on those businesses, but also then on the consumers across the world?
For the businesses that face higher tariffs in China that might make it frankly impossible to sell their products to China, the answer is to look for other markets. That's something that China is doing in the face of higher US tariffs, and this has been discussed a lot in recent days, that China has other markets to develop, such as Africa, the Middle East, South America, Central America, Southeast Asia. So American companies need to do that as well. And that's why it's so important that these other countries have already contacted the United States government to say we want to talk and we want to lower our tariffs on American goods. So we could criticize President Trump as much as we want, but if this was a negotiating tactic that prompts other countries to lower their trade barriers to American goods, then his strategy would have worked, and American exporters will pick up additional markets where they'll be very competitive even without having the China option. But again, I think the expectation is also that the US and China will negotiate at some point, and these 100% plus tariffs will be reduced again.
Yes, Ross, I want to bring our discussion to an end by talking about the price of gold. And it has hit record highs, breaching that $3,200 benchmark. In terms of the price of gold, what does that show about global trust and security surrounding world economics?
It shows there's an extraordinary amount of insecurity, an extraordinary amount of volatility, and investors are going to go for one of the few items that they feel is very safe to be in times of volatility, and that's gold. And that's why we see the price of gold going up so much.
Absolutely, Ross. Thank you ever so much for joining us and providing us your insight.